Hello, welcome to the Market Carver. I'm Adam Harter, Chief Investment Officer, along with Andrew Thrasher, Chartered Market Technician and Portfolio Manager. Thank you, as always, for joining and giving us a few minutes of your time where we go over some things that we think would be helpful for you to know. This week, we're going to talk about short-term versus long-term focus, and really a fact that really stands out to me as surprising, even though I've lived through the entire period. We'll get to that in just a second, and then take a look at bullish momentum and that range from a technical lens from Andrew. So for starters here, we're going to talk about, once again, the Magnificent Seven or large cap growth stocks, specifically the NASDAQ 100 would be the index that most is closely aligned with those companies. And it has had just a tremendous run, even more heated this year, but more in general over the past, say, 10, 12 years. It's been a very, very strong run. Save for a pretty strong correction during COVID and a pretty strong correction in 2018. Aside from that, it has just been one big boom. Contrasting that, energy stocks have been largely flat for a long time. So it sticks out like a sore thumb to take a look back and find that energy stocks have actually outpaced the NASDAQ 100 going back to the beginning of this century. Now, the important fact here is that at the beginning of this century, something else and important was going on, and that was the end of the dot-com boom in the late 90s. So a very severe, like 70% drop for the NASDAQ 100. The specific percentage has escaped me, but it's in that neighborhood. Just a dramatic sell-off. And so to us, this just illustrates the importance and the long-term damage that can come from one isolated or one over-concentration at the wrong time. The great Bob Knight, for you IU fans like me, once wrote The Power of Negative Thinking, just as kind of a play on words for the title, but in a serious way was approached to his coaching, and I think has some valuable lessons for investing as well. So much about what we believe and what we do is trying to identify those things that can really create long-term damage, and then seeking to avoid those. And this is one example where you can see an asset class that's just had about as strong as a run as you can, still been behind energy stocks, which they've outpaced for a good 10, 15 years. So that's what I have for you. I'm going to pivot now for Andrew to get a more updated look at today's market.
Thank you, Adam. So we've had a little bit of volatility into the market. The indices have come down from their highs. And when we start having these bouts of weakness, we want to not only watch day to day to see, evaluate what's happening in the market, where's leadership, how are individual stocks performing, but we also want to take a step back. We want to zoom out when we start looking at that market data and start recognizing where's the long-term trends taking place. Are we still in a major uptrend, or are we starting to see signs of a shift towards a downtrend? And that was one of the main charts that I shared in this week's allocation meeting, the one that's on your screen now. And it's looking at the S&P 500 going back quite a bit, going all the way back to late 2001. In the bottom part of that chart where it says bull range and bear range is looking at a 14-period momentum indicator. And momentum indicators are very simply the speed that the market or the stock or what have you is going. And oftentimes, just like if you were to make a U-turn in your car, you're going to have to start slowing your speed down to make that turn. And we see the market do the same thing, where the momentum begins to slow down during some larger downturns in the trends. But we can also evaluate the different ranges that momentum is in. When we start seeing really high levels of momentum, it's a positive sign that the long-term trend that will sustain that speed, so to speak, in that long-term uptrend. However, when we start seeing really low levels of momentum, it's kind of the opposite, that the speed is reversed and we're starting to see an increase in speed going down. And so as we start seeing this increase in volatility, we want to evaluate, what is momentum telling us? Has the car of the market just begun to slow down, or is it actually starting to reverse? And right now, at the level we were at the end of last week was 56, not to harbor on the specific level, but we're still at a very high level of momentum. In fact, when we start getting into these bullish ranges, like we still are today, you can see the green arrows on the chart. When we go from a bear range to a bull range, you can see it's often been the start of a new uptrend. We had the last one occurred last year after we had a minor pullback, and the one before that was after the bear market in 2022. Right now, we're coming off a very high level of momentum. The market's still very much in an uptrend. And from a momentum, from the speed point of view, things still look healthy and still look positive. And this is something that we evaluate every week and looking for when we start seeing changes in those ranges, changing in the speed of the market of the increase or the decline if we were in a downtrend. But as of right now, with this pullback, things from a momentum standpoint still look positive, still look structurally okay for the uptrend that we've been in now for over a year.
All right. Thank you, Andrew, for that update. And I told Andrew privately, but, I think, heck, it's we're saying publicly as well. That just when we go through markets of turmoil like we had last week, I can tell you just the great sense of peace and comfort it has to doing this alongside Andrew, whose focus is on these charts and drilling down into market direction. I can truly say there's no one better in the industry looking and dissecting charts. And so that's been incredibly valuable. And thank you, Andrew. And as always, thank you to you guys as well. If we can be of service to you, please give us a call, 800-928-4001, or scan the QR code and do it electronically. So thanks again. Have a great weekend.